Welcome to the Weekly Option, the podcast for people interested in trading stock options. Each week, we cover trade ideas and opportunities in the stock market right now. Whether you're a beginner, a professional, or just curious about options, this is the show for you. Let's get started. Welcome to the Weekly Option. This is episode 37 on November the 24th, 2018. I'm your host, Eric, and in this week's show, we will cover the trades from last week on Treehouse Foods, Barrick Gold, and BP, and we discuss 3 new trades on Foot Locker, Wells Fargo, and Facebook. Now, it's always great to hear from listeners. If you have any questions about the trades presented here or about your own positions, feel free to email me. You can email questions to me at eric@theweeklyoption.com. That's ERIC@theweeklyoption.com. I've also created a short video series to teach you all the basics of option trading that you'll need to know to be able to follow along with me on this show. You can visit the website and click on the videos tab to watch them, or visit our YouTube channel for the Weekly Option. Now, this week, this trading week, was shorter due to the Thanksgiving holiday in the U.S. In the past, we've seen some wild market movements the day after Thanksgiving. Yesterday, Friday, actually was pretty mild relative to some of the moves, 200, 300, 400 points up or down that we've seen the day after Thanksgiving in the past. Now, the stock market ended the week lower. The Dow Jones Industrial Index finished the week down 127 points, ending at 25,285 points. The S&P 500 index fell 103 points this week, or roughly 3%, ending the week at 2,632 points. Now, this upcoming week, 122 publicly traded companies in the U.S. will be announcing their quarterly earnings. We will hear from the Cracker Barrel on Tuesday, Sears Holding Company and Tiffany's on Wednesday, and then Abercrombie and Fitch, Dollar Tree, and HP will each announce quarterly earnings on Thursday. I'd like to take a minute to wish everyone a happy Thanksgiving and a happy start to the holiday season. Now, I have my own Black Friday offer for you guys, so if you email me with Black Friday in the subject line, I will share one of my favorite trading tools, and I will enter you into a drawing for one of my favorite option trading books. My email, of course, is eric@theweeklyoption.com, or you can enter your information into our contact page on the Weekly Option website. We'll start off our review of last week's trades with the covered call. We looked at Treehouse Foods, symbol THS, Thomas Howard Sam. The stock at the time was trading for $51.88, and we looked at selling the December 55 call for 95 cents against that stock and looking at a 7.85% return over the next 5 weeks. Well, Treehouse stock rose $1.12 this week, finishing at $53 per share. We're still $2 less than or lower than our strike price, but so far so good. The December 55 call that we sold is up 65 cents. So all in all, we made 57 cents this week if you were to buy back the call that you sold and sell the stock that you own. This trade has 4 weeks left to gain an additional $2. So I think you leave it alone. It's making money, so no need to end it now unless you really want to lock in the 57-cent gain that you made per share this last week. Now, our second trade was a credit spread. We looked at Barrick Gold, symbol ABX, Atom Berry X-ray. Stock was trading for $13.04. We looked at selling the December 13-12 put spread for 32 cents. Now, Barrick Gold rose 5 cents this week, ending the week at $13.09. I sold the December 13-12 put spread, which means I want stock to go higher. So the stock is moving in the right direction for my trade to be successful, and the option prices really didn't change much. If we were to buy back this spread right now, we would actually lose 4 cents, mostly because we'd have to cross the bid-ask spread. But if we were to add to this spread, meaning if I wanted to sell more of it, sell more put spreads, we would only collect 31 cents, which is a penny less than last week. So all in all, the trade is working. As long as stock keeps moving in this direction, we need 2 things. We need more time to pass, and we want the stock to remain strong over the next few weeks. We want it to go up. So this one trade is really neutral, but ultimately it's looking like it's going to finish up a winner. Our final trade that we're going to review from last week is the debit spread that we looked at on BP. The stock was trading for $40.84, and I bought the December 42.41 put spread for 63 cents, looking at a maximum gain of 37 cents or roughly 59% return in 5 weeks. Now, BP stock finished the week 95 cents lower than last week. That means that the in-the-money put spread, which we bought, is even more in the money now. We want prices to go lower, and they did. So the December 42.41 put spread would actually cost you 2 cents if you were to exit out of it right now, again, because you'd have to cross the bid-ask spread. But the purchase price actually rose by 10 cents in 1 week, and that's a 15% increase. So we know that this trade really just needs more time to pass. There are 4 weeks left. If stock is right here, if stock is sitting right where it is 2 weeks from now, this trade will be priced over 80 cents. Now, of course, if it finishes in the money, which means that the stock price stayed below $41 per share, then this spread that we paid 63 cents for will be worth $1 in 4 weeks. So this is a winner that's worth staying in as well and continuing to trade without any adjustments needed. So essentially 3 for 3 this week. No need to make any adjustments. We just need to let stock keep doing what it's doing. Now let's take a look at the trades for this upcoming week. I am looking at a covered call on Foot Locker stock, symbol FL, Frank Larry. The stock finished the week at $52.96, and I'm looking at selling that December 55 call and collecting $1.40, which would yield about a 6.5% return in 4 weeks. Now, you would enter this trade by buying Foot Locker stock for $52.96 and then selling the December 55 call for $1.40. Ultimately, a lot of people will shop, retail in the next few weeks, and Foot Locker tends to do well in that in shopping for teenagers and the athletic boys and girls out there. So I really am bullish on the stock, and I think this should end up a successful trade at the end of the day. We're actually looking for this stock to move another $2.04 in the next 4 weeks in order to yield us our maximum return of 6.5%. Now, this trade makes its maximum profit if stock price finishes above $55 per share at expiration, or at least finishes higher than where it is, but less than $55 per share, which would allow us to sell another call against it next month. Now, our second trade for the week is a credit spread on Wells Fargo, symbol WFC, William Frank Charles. The stock ended the week at $51.83, and I'm looking at selling the December 52.5 53 call spread at 18 cents, which yields a maximum loss of 32 cents if stock moves against us. So, there are a couple of articles out there talking about the strength of the banks long term, but the banks will really be based, their success is going to be based so much on the overall economy. And I just think over the next 4 weeks, as we finish out the year, and we're even looking to see if this year is going to finish positive or negative for both the S&P and the Dow. I really am not very bullish on the bank stocks right now. I think they'll do well in Q1, but to wrap up Q4, I'm okay with selling this call spread. So you would enter this trade by selling the December 52.5 call at $1.15 and then paying 97 cents for the December 53 call. This is a credit spread because we're selling the spread. So this trade makes its maximum amount of money as long as prices stay below $52.50, which is where it is right now. Right now it's trading $51.83. So as long as we, that's a 67 cents cushion in the stock. So we really just want stock to stay below 52.5, and we'll get to keep our 18 cents, which is essentially 36% return on the maximum risk of this spread. And then our final trade this week is going to be a debit spread on Facebook. And everyone loves Facebook. It's it's an expensive stock, but their options actually create some nice opportunities for us that are affordable literally for any budget. Now, Facebook, symbol FB, Frank Bryan, the stock finished the week at $131.73, and I'm looking at buying the December 133-132 put spread, paying 60 cents for that spread, which will give us a maximum gain of 40 cents, which is about a 66% return in 4 weeks. Now, you enter this trade by buying the December 133 put for $6.05 and then selling the December 132 put for $5.45. This is a debit spread because we are buying the spread, and this trade makes the most money if stock prices stay below $132 per share. And I think Facebook over the next few weeks, many of the tech companies, for that matter, have several challenges to overcome, and I think this will end up being a successful trade. So thank you guys again for listening to the show this week. Don't forget to email me about the Black Friday giveaway contest, where I'm going to be giving away one of my favorite tools to use in helping with my trades each week, and also one of my favorite books on option trading. You can never know too much, well, unless it keeps you from trading. But honestly, the more you know and the more you understand, the more you're going to want to be in this market. So that's all I've got for you. Email me at eric@theweeklyoption.com. And otherwise, have a great week. Happy trading. Bye-bye. Thank you for listening to the Weekly Option Podcast. Please subscribe to our show and visit us at www.theweeklyoption.com. Disclaimer: there is a very high degree of risk involved in trading. The indicators and strategies described in this podcast are for educational purposes only and should not be construed as investment advice. For our full disclaimer, visit our website at www.theweeklyoption.com.